Hey everyone, today we're tackling a topic that many of you have asked about: car financing. It can seem like a super complicated process, but I promise by the end of this video, you'll feel much more confident about getting behind the wheel of your dream car without breaking the bank. So grab a drink, get comfortable, and let's dive into the world of auto loans. First things first, what exactly is car financing? Simply put, it's a loan you take out to buy a vehicle. Instead of paying the full price up front, you borrow money from a lender, like a bank, a credit union, or the dealership's financing department, and you pay it back over time in monthly installments plus interest. This makes buying a car much more manageable for most people. Now, before you even step foot in a dealership, the most important thing you can do is check your credit score. Your credit score is a 3-digit number that tells lenders how risky it is to lend you money. A higher score means you're seen as a reliable borrower, which usually gets you a lower interest rate. And a lower interest rate can save you thousands of dollars over the life of your loan. You can get a free copy of your credit report from the major credit bureaus once a year. Go through it carefully and dispute any errors you find. If your score is a bit low, don't panic. We'll talk about options for bad credit a little later. Once you know your credit score, it's time to figure out your budget. This is a crucial step. Don't just think about the monthly payment. You need to consider the total cost of car ownership. This includes not just the loan payment, but also car insurance, which can be significantly higher for a new or more expensive car. Then there's gas, regular maintenance like oil changes and tire rotations, and potential repairs. A good rule of thumb is the 24-to-10 rule. It suggests you should make a down payment of at least 20%, finance the car for no more than 4 years, and keep your total monthly car expenses, including principal, interest, and insurance, under 10% of your gross monthly income. This is a conservative approach, but it's a great way to ensure your car doesn't become a financial burden. So you've checked your credit, you've set your budget, now what? The next step is to get pre-approved for a loan. This is a game changer. Getting pre-approved means a lender has reviewed your financial information and has tentatively agreed to lend you a certain amount of money at a specific interest rate. You can get pre-approved from your own bank or a local credit union. Why is this so important? Because it gives you negotiating power. When you walk into a dealership with a pre-approval letter in hand, you're not just a car shopper, you're a cash buyer. The dealership knows you have financing secured, so they have to compete for your business. This prevents you from being pushed into a high-interest loan by the dealership's finance manager, who often makes a commission on the loans they sell. All right, let's talk about where to get your loan. You have several options. First, as I mentioned, are banks and credit unions. They often offer competitive rates, especially if you already have an account with them. Credit unions, in particular, are non-profits and are known for having great customer service and lower interest rates. The second option is online lenders. There are many reputable online platforms that allow you to compare offers from multiple lenders at once. It's quick, easy, and can help you find a great deal. The third option is dealership financing. This can be convenient because you handle everything in one place. Sometimes automakers offer special promotional financing with super low or even 0% interest rates on certain models. However, be cautious. Always compare the dealership's offer with your pre-approval to make sure you're getting the best deal. Don't let them pressure you into a decision. Now, for a question I get all the time: can I finance a car with bad credit? The short answer is yes, it is possible, but it will be more challenging and more expensive. Lenders see bad credit as a higher risk, so they charge higher interest rates to compensate for that risk. If you have a credit score below, say, 620, you're generally considered a subprime borrower. But don't lose hope. There are lenders who specialize in subprime auto loans. Your best bet is to work on improving your credit before you apply, but if you need a car now, be prepared for a higher interest rate. Making a larger down payment can also really help your chances of approval and might even lower your interest rate a bit because it reduces the amount the lender has to risk. Let's quickly touch on loan terms. You'll see offers for loans that last anywhere from 36 months. That's 3 years, all the way up to 84 months or 7 years. A longer loan term means a lower monthly payment, which can be very tempting, but be very careful here. The longer you stretch out the loan, the more interest you'll pay in total. Plus, with a long loan, you risk becoming upside down, which means you owe more on the car than it's actually worth. This is a bad spot to be in if you need to sell the car or if it gets totaled in an accident. My advice? Stick to the shortest loan term you can comfortably afford. A 60-month or 5-year loan is a common maximum that I would suggest aiming for. What about leasing versus buying? This is another big question. When you buy a car with a loan, you're paying to own it. Once you make that final payment, the car is 100% yours. When you lease, you're essentially renting the car for a set period, usually 2 to 3 years. Your monthly payments are typically lower than loan payments because you're only paying for the car's depreciation during the lease term, not the full price. At the end of the lease, you just return the car to the dealership. So, which is better? It really depends on your lifestyle. If you like having a new car every few years, don't drive a ton of miles, and want a lower monthly payment without the hassle of selling a used car, leasing might be a great option. However, leases come with mileage limits, and if you go over, the penalties can be expensive. You also have to keep the car in excellent condition. If you prefer to own your asset, drive a lot, or like to customize your vehicle, buying is probably the way to go. In the long run, buying and holding onto a car for many years is almost always the more financially sound decision. Let's run through some common mistakes to avoid. First, don't just focus on the monthly payment. A salesperson might say, "I can get you into this car for just $400 a month." But if that's on an 84-month loan, you could be overpaying by thousands. Always negotiate the total price of the car first before you ever talk about financing. Second, don't forget about add-ons. The finance office is where dealerships make a lot of their profit. They'll try to sell you things like extended warranties, gap insurance, and fabric protection. Some of these can be valuable, but they are often overpriced. Do your research beforehand and know what these things are worth. You can often buy them cheaper from a third party. And finally, read everything before you sign. I know it's a mountain of paperwork, but you need to understand what you're agreeing to. Check the interest rate, the loan term, the total amount financed, and make sure there are no hidden fees or prepayment penalties. So, to recap the smart way to finance your car, start by checking your credit and making a realistic budget. Get pre-approved for a loan from your bank or a credit union before you go shopping. Negotiate the price of the car first, then discuss financing. Compare the dealership's offer to your pre-approval. Choose the shortest loan term you can afford. And finally, read the fine print carefully before you sign anything. Following these steps will put you in the driver's seat of the financing process, not the other way around. It will help you drive away with confidence, knowing you got a great car at a fair price with a loan that works for you. Buying a car should be an exciting experience, and with a little preparation, it absolutely can be. Thank you so much for watching. I hope this guide helps you on your car buying journey. If you found this video helpful, please give it a thumbs up and don't forget to subscribe for more tips on managing your money. If you have any questions, drop them in the comments below. See you in the next video.